Hey everyone, last week we released two videos for quarterly earnings season, ASML Holding and Lam Research. We got a lot of great feedback specifically on the ASML video as we focused on reasons why not to buy that stock. Taiwan Semiconductor Manufacturing also released last week, and this is not one we own here at Chip Stock Investor, not one that we're planning to add to right now, but rather are buying stocks of key suppliers to Taiwan Semiconductor Manufacturing. So I wanted to do four reasons why we're not buying TSMC, which explains why we are buying the chip fab equipment stocks like Applied Materials. Let's get to it. Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. Real quick, before hitting on those four reasons we're not buying TSMC, let me show you our semiconductor industry flowchart. In case you're not familiar with who TSMC is, TSMC is a chip fabricator or chip foundry. They actually manufacture semiconductors. You can see how the whole industry sort of flows into those chip fabricators. They're kind of in the top center of our chart here before those chips get turned into devices, into equipment. TSMC, an incredibly important company because Taiwan, the island of Taiwan, controls chip manufacturing. In fact, TSMC specifically accounts for some 90% of the world's most advanced semiconductors. So everything from high-end smartphones like Apple's iPhone to those really advanced AI chips that NVIDIA designs, you name it, 90% of those are made specifically by TSMC. Suffice to say, this is a very important company that if something happened to them, not only would the whole tech industry come to a grinding halt, you could make the argument that the entire global economy as we know it would shut down. That's why a lot of investors invest in TSMC. Great growth story, gradual dividend growth stock. This is a great business. Don't get me wrong here before we delve into the reasons why we are not buying. That being said, there is a ton of value in considering both sides of an investment thesis, not just all the reasons to be bullish on a company. So, my first reason to be bearish on TSMC. As expected, the company is in the midst of a slump in the semiconductor market. Now, as expected, Taiwan Semiconductor Manufacturing's revenue did fall in the first quarter, fell about 5% year over year in US dollar terms. Earnings per share fell just over 6% year over year. And that trend is expected to accelerate just a bit in the second quarter of 2023 before the company returns to sequential growth the second half of this year. And you can see this illustrated in the same chart that we shared last quarter because this outlook is largely unchanged. Over half, 51% of the company's revenue came from 5 and 7 nanometer chip manufacturing. Currently, at this point, the bulk of TSMC's advanced chip making. 3 nanometer, the next gen, most advanced as of this moment, chip manufacturing node, is presently ramping up and will hit full production the second half of this year, and 3NE, sort of the next gen 3 nanometer manufacturing node, will begin ramping up the second half of this year. Now, that's important because all of this is happening in the midst of this semiconductor industry slump. That's important for any manufacturing company because whenever there's a downturn, revenue falls, which means manufacturing utilization goes down, which means lower profit margins. But in tandem with this, the effects of inflation are simultaneously beginning to work through the global economy. Just one example here, TSMC said that they are dealing with increased utility, increased electricity costs in Taiwan. In fact, so much so that the company said that their gross profit margin is going to get hit by 50 basis points or 0.5% reduction in their gross profit margin in 2023 because of just this one line item in their cost of manufacturing. So this is significant. I think in the midst of this downturn, yes, revenue is falling as expected, but perhaps profit margins are also going to take a bit greater hit than we initially expected. So, reason number one to be bearish on TSMC, it's a manufacturer, and so it's having to eat a lot of cost due to inflation. Reason number two, again, related to that last chart I just showed you, TSMC is expecting a return to quarter over quarter sequential growth by the second half of 2023. However, the current chip downturn is taking a bit longer to work through than expected. Now, let me bring you up to speed on this really quick. This is being driven by an oversupply of certain chips and components, especially in PCs and smartphones. And TSMC said that their customers are still dealing with this excess inventory problem. So before they had said by the middle of 2023, they expected global inventories of chips to be back in balance in a healthy range. Now it looks like they're saying maybe the third quarter of 2023. So maybe a few weeks, maybe a month or two later than expected. However, this is impacting the company's near-term growth outlook. Perhaps full year 2023 growth, especially the back half of the year, isn't as great as expected. Maybe the ramp up isn't as strong entering into 2024. I think that's an important second reason to be bearish on this company. Reason number three is China. Now, I'm not a political commentator, no intention to ever be one. So please do not take this as political commentary, but I think it's important to keep in mind when considering a thesis in this company. TSMC is highly reliant on China. In fact, it has a fab there to support its Chinese customers. And indeed, the entire semiconductor industry is highly reliant on mainland China because so much back end packaging of chips happens there. So, two things here to keep in mind. First, TSMC's reliance on China business. The reopening of mainland China is taking longer than TSMC had anticipated. So again, I think that could affect the cadence of revenue growth the second half of this year and into 2024. And second, this is where geopolitics comes into play, and I'm not going to comment on this extensively, is there is this persistent worry that China will eventually invade Taiwan and execute its one China policy, basically reuniting mainland China, reuniting Taiwan with the rest of mainland China. It would be an understatement, again, to say that that would be disastrous for TSMC and really for the global economy. At any rate, that's one reason to not invest in TSMC. And in fact, recently, one of the reasons why Warren Buffett said he quickly reversed course and sold most of Berkshire Hathaway's stake in TSMC at the tail end of 2022 after taking a more than $4 billion stake in this key manufacturer. Reason number four, chip manufacturing competition. So TSMC is the first manufacturer to bring its 3 nanometer manufacturing process to bulk production. However, at the 3 nanometer and beyond, think 2 nanometer, that will hit production in 2025. At 3 nanometer and beyond, TSMC is going to have some real competition in this department, specifically from Samsung and Intel. Both of those companies spending a lot of money to try to not just keep up with TSMC's capabilities, but potentially overtake them in the coming years. Uh, I don't think that's going to happen. Nevertheless, it's important to bear in mind that the bulk of TSMC's revenue comes from these most advanced chips, high performance computing and smartphone. That's where most of these 3 nanometer and beyond chips are going to go. And in the next 5 to 10 years, I think a massive amount of investment is going to continue to funnel into the automotive sector. So more competition here. TSMC is obviously, as you can see from this chart here, getting a little bit of upward lift from its automotive segment, but it's only 7% of revenue last quarter. It is a small part of TSMC's overall financial structure. I think there are a lot of other chip manufacturers that are not competing in this high-end compute, most advanced smartphone chip market that are going to do quite well in the next 5 to 10 years. So lots of competition for TSMC on the 3 nanometer and beyond front, and a lot of other manufacturers gunning for this automotive segment that could put in some very healthy investment returns in the coming years. All of this is basically to say, I don't think TSMC is in control of its own destiny to the same degree that it was in the previous decade. We've got a lot of government funding in the US, in Europe, Japan, and South Korea that could help other companies narrow the lead that TSMC has, which has led us to focus on two other very critical choke points in the semiconductor industry. Uh, Chip fab equipment stocks. Applied Materials, currently the largest, as far as revenue goes, in the space, the broadest portfolio of chip fab equipment. Basically, TSMC makes the chips, but they cannot make those chips unless they buy equipment from Applied Materials. ASML, another fantastic one that we just did that video on a few days ago. Check that out. And a lot of other fantastic businesses in the space that we feel will gobble up most of the new profit the semiconductor industry generates in the next 3 to 5 years. TSMC highly reliant on those businesses. That's where we're currently deploying our investment dollars. Second critical choke point, electronic design automation companies. There are three that control this market, basically an oligopoly here: Cadence Design, Synopsys, and Mentor. Cadence Design reports, as of this recording, in later on today. So that's the next video we have coming out, focusing again on electronic design automation software companies, EDA, an underfollowed and underappreciated segment, not just of the semiconductor industry, but the entire technology space and the whole economy as it exists right now. Stay tuned for that. Cadence Design Systems. Hope you found this video helpful as you do your analysis on TSMC. Make sure you hit the follow button. If you'd like to leave us a coffee tip, because we need our coffee here at Chip Stock Investor, link to that in the description below. Thanks, everyone.